Jamie just produced a report on Real Vision about it's kind of his deep dive on where he thinks this cycle ends, the kind of valuations he sees, where the opportunities lie. And I thought, you know what? This should not just be for pro-crypto people. This should be for everyone. I think it's a really important piece. And I love his framework, and it's going to give you something to better understand how to invest in this space and capture that opportunity from $2 trillion to $100 trillion. So I'm going to talk to Jamie. We're going to go through his research. You're going to understand a lot more about this space, where the opportunities lie, where this is going for this cycle, how to think about it.
Bitcoin is poised for explosive growth, with experts predicting a price surge to $234,000 by August 2025 and a staggering $100 trillion market value by 2026. This bold forecast comes from Real Vision's Raoul Pal and chief crypto analyst Jamie Coate. Bitcoin is already on a strong upward trajectory, and its growth since 2013 suggests there are even bigger gains on the horizon. In a recent conversation, Jamie Coates shared his latest analysis on Bitcoin's future potential. Drawing insights from current global liquidity trends, past market cycles, and Bitcoin's performance during each period, Coates made several price predictions. Based on this data, he forecasts that Bitcoin could soar to $234,000 by August 2025. Be sure to stay tuned until the end of the video, as Jamie Coates breaks down his analysis and shares his thoughts on what Bitcoin's price and performance could look like in the coming years.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
Yeah, the most explainable is just to look at the linear growth of the Bitcoin chart from sort of 2013, and this chart you can see cuts off down the bottom left-hand corner, just so you can sort of fit things in. But it's really that linear chart from the 2012 period. So you cut out those first really 2 years, which were just, I don't think liquidity and, where Bitcoin was traded has a lot of meaning towards the forward projection of the trend. If you look at that linear growth, you can see that the potential for Bitcoin to reach certain levels this cycle. So my base case is if we just look at global M2 and back it out to August, which was where the Bitcoin cycle peaks, that infers a price of about 100,000 on Bitcoin, which I'm placing as a potential outcome, but a very low probability outcome. My proportionality forecast is 170,000. That was the one that I produced last year, when Bitcoin is more or less still in a bear market. And then you've got these more optimistic scenarios where maybe Bitcoin gets back just to the mean, the red line of the linear price chart, which would imply a price of around 234,000, and then something crazy, where it goes absolutely parabolic and maybe up to 1 standard deviation. So that's the range of outcomes. The question is what probabilities do you assign to each of those potential outcomes to come up with some sort of grounded, probability weighted projection? And so, as I mentioned, global M2 regression line of 100,000 is sort of like my base case or worst case. And then all I've done is I've looked at these other potential outcomes and assigned a probability. I don't think Bitcoin is going to go parabolic to 500,000 this cycle. I see 500,000 in the future, not this cycle. So it's a very low probability. And the outcome is just this probability weighted market forecast of 189,000 for Bitcoin by August of next year, which will give it a market cap of around 3.75 trillion. Seems, for those uninitiated, seems crazy perhaps, but all I've done is taken, previous trends and also regress it against global liquidity, which is at this point probably one of the safest bets, right, in terms of what that particular macro liquidity variable will do, and then form a basis of where I think the cycle will end and also get to. My view is that I just have this very simple sort of outlook for the Bitcoin price as being sort of proportional in nature. It's exponential, but it is actually starting to moderate in terms of the cycle. And so I applied just I think what was a very common sense sort of proportionality sort of discount, looking at the previous cycles, which are these blue bars that you can see here. These are the returns from the trough to the peak in the previous cycles. And then the next 3 bars in different colors are sort of the projections based on, the proportionality of the trough to peak move for this cycle. And so my base case was actually the bullish projection of about 170,000, which is half the trough to peak return of the previous cycle. And I still use this in the modeling in the report because, number one, I want to keep myself, I want to be accountable to what I've said in the past, but I believe that this, is just a very common sense approach. And then we sort of go into more sort of statistical ways of looking at it. So then I sort of think about, okay, well, we understand that global liquidity drives asset prices. What is the correlation, or how much do these different metrics explain the Bitcoin price? Bitcoin dominance is well over 50% today. What Bitcoin does, so does the rest of the market. So you have to sort of start there and then back out from there about the other sectors or the other assets in the space. But you look across these different sort of macro indicators or liquidity indicators. Global M2 in the far right has generally been the strongest predictor or explanatory variable for Bitcoin. So from there, I then looked at, okay, if global M2 explains about 70 to 80% of the Bitcoin price, what will global M2 do in this cycle? If we look at what it has done in the past. So just looking at the way you can track the trough to peak moves in Bitcoin, you can do that in global M2. And I wanted to understand generally, how much does global M2 expand and contract, and how long are those expansions and contraction periods? And so that provided me with just some general averages that I could apply in my modeling for the crypto cycle. And so what I found was that generally M2 will expand by about 34%, give or take. The contractions are a lot shorter because as you know, debt must always expand in a credit-based system. So we have these small contractions, shallow contraction, and we have these longer, larger expansion periods. It tends to correlate to the 4 years. So if you look at the number of days, contraction is roughly around sort of 9 to 10 months. Expansions are around 3 years, 3 and change. So yeah, so you've got your 3 seasons in the expansion period, and that the winter is your contraction. So based on that, if you look down at the bottom of the table, it just says that, global M2 could peak out at about 127 trillion this cycle. And based on the duration of previous cycles, it should top out at some point, maybe in Q1 2026, specifically, January, according to the model. And then we'll have the crypto winter, as you call it, sort of trough out or bottom out in Q3, Q4 of 2026. And so, again, this is just that projection on the time series of global money supply. But then we have to sort of consider, what does Bitcoin do in relation to global money supply? And if you just overlay the 2 time series, Bitcoin peaks before global money supply peaks. Bitcoin sniffs out the change in global monetary conditions very, very well. At least it has in the past, and I hope it continues to do so. And generally that's just because if you look at the rate of change of global M2, a slowing rate of change, it could still be positive, it could still be going up. But as soon as that starts to moderate, Bitcoin understands, or people trading Bitcoin because of its properties understand that the end is nigh. And so if we look at the actual time it takes generally for Bitcoin, or the period it usually peaks before the global M2 peak, it's roughly 160 days based on previous cycles. It's been as narrow as 116 days and as long as 222 days. And in terms of the troughs, they generally trough around the same time. So if you sort of back out from January, the global M2 peak, projected peak, kind of get this Bitcoin peak that looks to be around.
One of the most intriguing aspects of S analysis is the connection between Bitcoin and global liquidity. He points out that global M2 has been one of the most reliable indicators of Bitcoin's price movements, explaining about 70 to 80% of its fluctuations. By analyzing historical trends, Coates concludes that during periods of economic expansion, global M2 typically grows by around 34%. In contrast, liquidity contractions tend to be shorter and less severe, which aligns with his observations of Bitcoin's cyclical nature. Looking ahead, Coates projects that global M2 could peak at approximately $127 trillion by early 2026. He believes that Bitcoin usually peaks before global liquidity, serving as an early indicator of shifts in monetary conditions. Based on this, he estimates that Bitcoin's price peak may occur around August 2026, just ahead of the expected global M2 peak. Do you agree with this prediction? Share your thoughts in the comments below. Now, let's dive back into Jamie Coates' analysis as he explains further.
When people look at Bitcoin dominance, typically what they're doing is they're going to TradingView and they're looking at the Bitcoin dominance chart, which is like a default chart. So the Bitcoin dominance that I'm referring to is slightly different because I'm using Bitcoin dominance within the top 200. So the one you see on TradingView, I think is around 59%. In my top 200, Bitcoin dominance is around 63% currently. So it's slightly higher. In the top 200, it takes up a larger share. So I see a drop now in the Bitcoin dominance that I use. It tends to get as high as 70 and as low as 40 from the previous two cycles. So that's kind of like the range. So 53 is pretty much in the middle. I don't think this cycle Bitcoin dominance drops as much as it has in previous cycles. I made mention of this in the report, and I talked about it in a report back from April about the increasing use of Bitcoin as collateral. I think Bitcoin's moneyness is increasing with every new use case of it underpinning as a collateral for something else. So what have we seen that have been really positive developments in this regard this year? We've seen the creation of staking protocols on the Bitcoin blockchain, which allow Bitcoin holders to stake their Bitcoin in other proof of stake networks without it leaving the base chain. So while some people will want to do absolutely nothing with their Bitcoin because it's the pristine collateral for their life, and they can't afford to risk it in any way, shape or form other than just hold it with the private keys, multi-sig or whatever, and not do anything with it, there's going to be a percentage of that $1.3 trillion market cap value. They're going to say, hey, I do want some yield. And they're going to seek that out in a couple of different, and then you've got sailors doing it, in a sort of less transparent way with large banking intermediaries by the sound of it. JP Morgan, I think he mentioned. So if that's how much Bitcoin does he?
I have no idea anymore.
It's about 1%, so maybe it's 100. I don't know. But so I always had in my mind there's probably like 10% of Bitcoin holders. So that's unlocking $130 billion in value to underpin or form collateral for other things, including namely proof of stake network, the blockchain economy. So that's one. But obviously you've got the potential for nation states as well. And I've been of the view that this will be the year that becomes a reality. It doesn't look like it's going to become a reality in 2024, but I have this suspicion that several countries are holding Bitcoin as of today, namely through their domestic mining operation. Whether they ever bring that to full light in a public forum, especially if you're a BRICS country or some country that's sort of sitting in between the two world blocks at the moment, you don't want to sort of make that known. Or even if you're inside one of these blocks like the Western bloc, it's just not convenient for you to be going around talking about holding Bitcoin because it is controversial. I think that's starting in a very, very small way. And so you've got that, you've got the nation state level, which is, nascent, but potentially starting. You've definitely got it happening within the crypto economy. Bitcoin is going to collateralize proof of stake blockchain. And then you've got the individual themselves, where in this cycle, I see them in Australia. There's a couple of companies who are doing lending against Bitcoin for the purposes of either private loans, but also mortgage, home loans, which I see an increasing use case for, given the unaffordability of property, that people have this huge Bitcoin stack and maybe not much else, and they need to actually find utility for that to buy property. So I just think that actually that's my thesis as to why Bitcoin dominance doesn't go down to the depths that it has in the previous cycle. And from that assumption, which obviously could be wrong, you can sort of back out what the rest of the asset class could be worth in this scenario where Bitcoin peaks in sort of August.
Skybridge Capital founder Anthony Scaramucci predicts that the U.S. Federal Reserve will allow inflation to rise higher than previous levels to address the country's growing debt crisis. As a result, he forecasts Bitcoin's price will soar, with an expected target of $170,000 by mid-2026. This would push Bitcoin's market capitalization to approximately $3.3 trillion, driven by its fixed supply and increasing demand. Scaramucci's positive outlook on Bitcoin is further reinforced by a surge in institutional interest, particularly in Bitcoin exchange-traded funds. The arrival of these ETFs has significantly boosted Bitcoin's visibility and accessibility to mainstream investors. BlackRock's Bitcoin ETF, in particular, has experienced impressive growth, with $872 million in net inflows, marking its largest influx since launching earlier this year. According to BTC Markets crypto analyst Rachel Lucas, the recent surge in BlackRock's Bitcoin ETF inflows is driven by several factors, including the global shift by central banks to reduce interest rates. This has boosted liquidity and made capital more accessible to investors. As these trends continue, it's clear that both Bitcoin and the broader crypto market are poised for substantial growth in the near future. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.